When it comes to the soothing of these nerves, you can see across the market reaction that there's still quite a bit of fear and volatility out there. What's the latest when it comes to proceedings at SVB, depositors, as well as, what really happens next with the assets of this bank?
Well, I think we know for certain now that the depositors, both insured and uninsured, are getting their money back. And indeed, a lot of founders and venture capitalists started to be able to access their accounts today. In terms of what happens to SVB, we still don't really know. There was an auction process over the weekend. It didn't end per se, but there wasn't a bid or there wasn't an outcome from it. And then the regulators announced their enormous kind of shock and awe backstop for the US banking system effectively. We do know that there were apparently bids for SVB over the weekend, but there just wasn't enough time to do the kind of risk assessment and due diligence that would be needed.
Sally, and what are we seeing in terms of contagion among other banks? Because we had seen the regional bank index also see a huge plunge, and some names see record drops today.
Yeah, it's probably not the outcome that regulators really hoped for. I think they were hoping their enormous backstop would really soothe concerns and calm the market more. But, the ultimate goal probably of that backstop wasn't really about shareholders or bank CEOs. It was about depositors. But we have seen, the volatility continue. We saw shares of First Republic, of Western Alliance, of these smaller regional lenders absolutely crashing today, which is not a positive sign for how the backstop is being taken, but it's a bit too early to say whether it has been effective or not. We will start to see that over the next few days when we learn of more, or if any, on the magnitude of outflows from some of these regional lenders.
We heard from Jay Powell in a statement saying that these events that have transpired require a full and transparent and swift review by the Federal Reserve. What are we expecting from this investigation?
Yeah, as part of this very painful, drawn-out process of finding out what went wrong, well, the Fed is essentially reviewing itself here and sort of probing its own internal assessments. We know the reason behind Silicon Valley Bank's failure was a lack of proper management of interest rate risk. It built up this huge portfolio of debt that it saw shrink as rates rose, and that meant when depositors pulled their money, it didn't have much liquidity. And regulators in Washington, they're assessing whether SVB and Signature Bank, which is the other bank that closed after failing on Sunday, had conducted the right planning, stress testing for an interest rate rising scenario.